same. I wanted to start with a bit of the headlines because a lot of times people say, okay, I intellectually understand this idea of some other method of exchanging value. We've throughout the millennia had many different ways of exchanging value that didn't rely on government issued paper or physical money. We've had sugar and salt, sugar cane, certainly gold and other precious metals. Unfortunately, the scourge of enslavement used people as property and exchanging. So there have been many different ways that people and communities, countries have exchanged value. But it's always interesting to see what the banking industry thinks of anything that might disrupt its dominant position as a matter of savings and loans and financial products. So I use this first slide with Jamie Dimon as a really great example. He was always hating on Bitcoin, saying it was worthless, et cetera. And then recently, mysteriously, he's changed his approach and believes now that even Bitcoin's slide from 67,000 at its all-time high down to where we are now, actually really great, interesting prices and interesting movement as a matter of charts. If you're a charter, I recommend, and I'm going to drop it in the chat for you to visit coinmarketcap.com. It's a free resource. It is an aggregator of crypto asset information. Every single cryptocurrency. There are over 23,000 different types of crypto. If you were just reading the headlines, you would only know, or listening to TV or news, you'd only know really about Bitcoin and Ether and maybe a couple of other coins. There are 23,000 different types. And so I want you to get even familiar with how to vet them. But Jamie's saying this downside of Bitcoin, or Bitcoin's slide, has created significant upside for crypto investors, meaning that fortunes are really made in down markets and they're realized when the market turns again. Bitcoin went down to as low as 17,000 in this latest bear market, and now is trading almost at 30,000. So for those who are playing the long game, and I recommend that you do, particularly in Bitcoin, there can be potential very valuable upside, and some of the brightest minds believe that. We've seen Visa, MasterCard, and PayPal changing their tune on Bitcoin and other crypto assets. A recent survey of millionaires finds that 73% own or want to invest in crypto as part of their overall portfolio, usually 2 to 5%. Unless they're super aggressive, and maybe it could be as much as 10. I don't recommend that you put any more one than you have to lose, and certainly not more than 10%. But the average person comes in at about 2 to 5% of their overall investment strategy. I want to go back really quickly to this slide because I don't want to rush over it. Deutsche Bank quietly plans to offer crypto custody and prime brokerage to its high net worth individuals. I didn't get a message from Deutsche Bank or from Morgan Stanley or from Bank of America or from Merrill Lynch or anywhere else, but evidently high net worth individuals are being exposed to crypto in a way that would de-risk, but also provide them exposure to this asset class as a part of their overall portfolio. So I believe in following the banks. I believe in following high net worth individuals as well, to see how they're moving, what they're acquiring, what the next step is. Interestingly, Morgan Stanley recently became one of the first big U.S. banks to offer to its wealthy clients access to Bitcoin funds. We see B of A really tardy to this party, but even B of A started offering crypto exchange traded products for some of its clients as well. And this interesting message that bankers issue this seismic warning that BTC, or Bitcoin ETH, the Binance coin, Cardano at the time, that's changed a bit, and XRP, currently in litigation with the SEC, but could very well win that suit. And the discussions around whether the US dollar would be displaced as the global reserve currency as other countries start to hedge their bets with gold and other things to reduce their reliance on the almighty dollar, that it's not going to happen today or tomorrow, but over time. Might there even be a global reserve that is independent of any particular country? We need to get ready for that moment. It's not a matter of if, but when. All nations at some point, they're down, then they're up, and then they're down again. So we need to stay ready so we don't have to get ready.